America's luxury housing dream is burning to the ground. Million-dollar homes once flaunted as untouchable trophies are now turning into financial tombstones. Across the nation, mansions with infinity pools, rooftop decks, and marble kitchens are rotting on the market, chopped by hundreds of thousands, sometimes millions. The wealthy are fleeing, buyers are gone, and sellers are watching their paper fortunes collapse overnight. This isn't a slowdown, it's an implosion. Here is the 10 U.S. cities where million-dollar homes are crumbling in value faster than the 2008 crash, and the fallout is only just beginning. Number 10. San Antonio, Texas. San Antonio, Texas, once the affordable sibling of Austin, is now finding itself at the wrong end of the luxury housing story. A million-dollar home in San Antonio used to buy you sprawling ranch-style estates, stone facades, and big backyards, often double the size of what you'd get in Los Angeles for the same price. But today, those same homes are bleeding value at a speed that's shocking even seasoned real estate watchers. According to recent MLS trends, luxury listings over $1 million in San Antonio have seen price cuts averaging 12% to 20% in the last year. That's $120,000 to $200,000 lopped off a house that was marketed as a dream mansion just 18 months ago. The supply side is brutal. Inventory for million-dollar listings has more than doubled since 2022, meaning the pool of unsold properties is swelling every month. Sellers who once laughed off lowball offers are now begging agents to just bring someone through the door. Homes that sat for 15 days on market in 2021 are now sitting for 90 to 120 days, and even then, buyers demand concessions like $50,000 closing credits, free swimming pool renovations, or full mortgage rate buydowns. The problem? The luxury buyer pool in San Antonio isn't deep enough. The average household income here hovers around $65,000, which means local professionals can't touch these price tags. Instead, million-dollar demand came from out-of-state buyers during the 2020 boom, many fleeing California's chaos. Now, with 7% mortgage rates and a tech slowdown, that buyer stream has dried up. What's left are overpriced trophy homes in neighborhoods where the neighbors are still paying $300,000 mortgages. The result? Wealth destruction in slow motion. Million-dollar homes that looked like golden tickets in 2021 are now anchors dragging down entire neighborhoods. And if rates don't drop soon, San Antonio's high-end market may enter freefall, with losses climbing toward 25% in the next year. Number 9. Miami, Florida. Miami, once the crown jewel of luxury real estate in America, is now showing cracks that even the glossy high-rises on Brickell Avenue can't hide. A million-dollar condo that used to sell within 48 hours in 2021 now sits for 120-plus days, bleeding value every week. Price cuts are everywhere. Zillow and Redfin trackers show that nearly 38% of Miami listings over $1 million have undergone slashes, some as brutal as $250,000 to $500,000 per unit. Imagine dropping $500,000 just to keep a buyer interested. That's the luxury market in Miami right now. The oversupply problem is catastrophic. Developers kept building glass towers and waterfront estates during the boom, assuming endless demand from New York, California, and Latin America. But the tide has turned. The once unstoppable wave of foreign buyers has slowed because of stricter capital controls abroad and the dollar's strength making U.S. property more expensive. Add in sky-high insurance premiums. Some owners are now paying $15,000 to $25,000 annually just to cover hurricane risks. And you see why sellers are desperate. Even the ultra-wealthy are backing out. Hedge fund managers and crypto millionaires who bought at peak prices in 2021 to 2022 are now unloading, realizing their Miami dream was just a mirage. In neighborhoods like Coral Gables and Coconut Grove, million-dollar homes that peaked at $1.5 million are being relisted at $1.2 million, and still, nobody bites. That's a 20% haircut, sometimes more. The scariest part? Miami's luxury crash has ripple effects. Property taxes on those inflated valuations are now crushing owners, while the city's reliance on luxury tourism and real estate dollars makes the downturn even uglier. Miami is no longer the promised land of wealth. It's ground zero for America's luxury housing collapse. Number 8. Atlanta, Georgia. Atlanta's luxury housing market was supposed to be bulletproof. With booming job growth, Hollywood productions setting up shop, and Fortune 500 headquarters flocking downtown, million-dollar homes once sold like hotcakes in Buckhead and Midtown. But today, the facade is cracking. In 2020, fewer than 1,000 homes in Atlanta were listed above $1 million. By mid-2024, that number ballooned past 3,500 to speculative construction and out-of-state buyers chasing southern bargains. Now, inventory is choking the market. The numbers are brutal. Million-dollar homes in Atlanta have seen average price cuts of 10 to 15%, wiping $150,000 off listings that were once marketed as untouchable. Time on market has quadrupled, climbing from 21 days in 2021 to 85-plus days in 2025. Even worse, buyers have leverage. Realtors report deals where sellers throw in $30,000 worth of renovations or accept offers $200,000 below, asking just to get contracts signed. Atlanta's affordability gap makes things uglier. The city's median household income sits at around $75,000, nowhere near enough to sustain a million-dollar buyer base. That means most luxury demand came from coastal relocators and investors during the pandemic frenzy. But as mortgage rates stick above 7%, those buyers have vanished. Left behind are stale listings, frustrated sellers, and neighborhoods where million-dollar mansions sit next to unsold townhomes. Even Buckhead, Atlanta's poster child for high-end living, is facing cracks. Homes that once commanded $1.8 million are being relisted for $1.4 million, a jaw-dropping $400,000 loss in equity. Combine that with rising property taxes and Georgia's growing crime headlines, and the shine of Atlanta luxury is fading fast. Atlanta's million-dollar market isn't collapsing quietly. It's unraveling in public, exposing how fragile this so-called southern boomtown really is. Number 7. Portland, Oregon. Portland's luxury market was always quirky. More eco-friendly glass cubes and hipster mansions than marble palaces. But the collapse is brutal nonetheless. Million-dollar homes in neighborhoods like the West Hills and Pearl District are now facing 15% to 25% value drops, translating to $200,000 to $400,000 losses in less than 2 years. That's generational wealth vanishing into thin air. The data paints a grim picture. In 2021, the average Portland home above $1 million spent just 12 days on market. Today, those same listings languish for 90 to 150 days, with desperate sellers slashing prices multiple times. Nearly 40% of million-dollar listings now show at least one price cut, some by as much as $500,000. Buyers smell blood, and lowball offers are becoming the norm. Why the collapse? Portland's appeal during the pandemic, remote work, open spaces, quirky lifestyle, has cooled. Population growth has slowed, and with median household incomes around $80,000, locals can't sustain the high-end demand. Meanwhile, property taxes in Oregon are climbing, and the infamous urban unrest headlines scared off investors who once saw Portland as the next Seattle. Even worse, Portland's climate policies and strict zoning have made it expensive to build and maintain million-dollar homes. Energy upgrades, solar requirements, and high HOA fees push annual costs over $20,000 in some luxury neighborhoods. Add in mortgage rates above 7%, and suddenly that dream eco-mansion feels like a money pit. The collapse is brutal not just for homeowners but for Portland's identity. Million-dollar listings were once a badge of progress. Today, they're cautionary tales. In a city that prides itself on sustainability and individuality, luxury real estate is proving unsustainable in the harshest way possible. Number 6. Sacramento, California. Sacramento, once the affordable alternative to San Francisco, is now bleeding out in the luxury housing sector. During the pandemic boom, million-dollar listings exploded across the city, especially in East Sacramento, Land Park, and Arden Arcade. In 2019, only about 6% of Sacramento homes sold above $1 million. By 2022, That number spiked to nearly 20%, fueled by Bay Area refugees flush with tech stock money. Now, that frenzy is dead, and Sacramento's high-end homes are sinking fast. The numbers are staggering. Million-dollar homes here are seeing average price drops of 12% to 18%, which means a $1.2 million property bought in 2021 is now being relisted at $1 million or less. Sellers who poured money into custom kitchens and backyard pools are watching $200,000 in paper wealth vanish. Days on market have ballooned from 15 days during the boom to over 95 days in 2025. Roughly 1 in 3 luxury listings in Sacramento is sitting unsold after 4 months, forcing sellers to slash asking prices or pull homes off the market. The affordability gap makes this collapse even uglier. Sacramento's median household income hovers at $80,000, nowhere near enough to sustain million-dollar demand locally. High-end buyers from San Francisco have stopped coming, partly because tech layoffs cut off their capital, and partly because Sacramento's appeal as a cheaper alternative disappears when prices themselves collapse. Worse, Sacramento's property taxes on a million-dollar home are about $12,000 annually, and with insurance premiums jumping another $4,000 to $6,000 a year due to wildfire risks, buyers see these homes as financial traps. Mortgage rates hovering at 7% mean a $1 million loan equals a $6,650 monthly payment, excluding taxes and insurance. For Sacramento, that's insane money. Now, luxury sellers are scrambling. Some are offering $50,000 credits for renovations, free solar panels, or mortgage rate buydowns just to get showings. What was once a pandemic-fueled luxury dream has turned into Sacramento's luxury nightmare. A market that's collapsing not from outside forces, but under the weight of its own hype. Number 5. Austin, Texas. Austin was supposed to be America's unstoppable boomtown. Tech jobs, live music, and a flood of Californians transformed it into one of the hottest luxury markets in the nation. Between 2019 and 2022, million-dollar home sales in Austin jumped by more than 200%, and in Westlake Hills or Tarrytown, $2 million bids weren't even enough. Now, the crash is brutal. In 2025, luxury homes in Austin are seeing price declines of 15% to 25%, with some McMansions losing $400,000 to $700,000 in value. A house that was listed at $2.5 million in 2022 is now struggling to find offers at $1.9 million. Redfin reports show that over 45% of Austin's million-dollar listings have undergone cuts, the highest rate in Texas. The supply is overwhelming. Pandemic builders threw up luxury subdivisions across Austin, assuming endless demand from Tesla employees and Silicon Valley migrants. But mortgage rates near 7% mean a $1.5 million home now costs buyers nearly $10,000 a month in payments when you include taxes and insurance. That's more than double what it cost in 2020. Buyers are frozen, and inventory has soared to record highs. Adding insult to injury, Austin's property taxes are crushing. With rates near 2.1%, a $1.5 million home racks up over $30,000 a year in property taxes. Insurance premiums? Add another $7,000 to $12,000, especially after recent hail and flood claims. Even wealthy buyers are calling Austin's luxury real estate a financial death sentence. The cultural hype has also cooled. The same Californians who once bragged about keeping Austin weird are now quietly leaving, realizing they paid peak prices in a market that has lost its shine. In neighborhoods like Barton Creek, homes that were once snapped up in bidding wars now sit 120-plus days unsold, with sellers throwing in six-figure discounts. Austin isn't just slowing, it's unraveling. The city's million-dollar market, once untouchable, is now a cautionary tale of overbuilding, overpricing, and overconfidence. Number 4. Boston, Massachusetts. Boston's luxury market didn't crash overnight. It's been slowly buckling under pressure. Unlike Austin or Sacramento, Boston never relied on wild speculation. Instead, it relied on stability, universities, hospitals, and finance. But even here, million-dollar homes are cracking. In 2019, only 30% of Boston homes were valued over $1 million. By 2022, that shot past 45%, especially in Back Bay, Beacon Hill, and Cambridge. Now, buyers have vanished and prices are falling. Million-dollar listings in Boston are down 10% to 15% from their peak, meaning a $1.3 million brownstone condo in Beacon Hill is now going for $1.1 million. In ultra-luxury neighborhoods, cuts are even deeper. Luxury penthouses that touched $4 million are now back under $3.2 million. That's an $800,000 haircut in less than 2 years. The buyer pool has dried up because affordability here is brutal. Boston's median household income sits around $95,000, yet a $1 million mortgage at 7% costs nearly $7,000 a month. Add Boston's property taxes, around $11,000 yearly, and HOA fees in luxury condos ranging from $1,500 to $2,500 a month, and even high earners balk at the costs. Worse, Boston's rental market is stealing demand. With rents softening in 2025, wealthy professionals are choosing to rent high-end apartments instead of sinking millions into depreciating condos. This shift is crushing luxury sales in neighborhoods once fueled by young biotech money. Time on market is another killer. In 2021, million-dollar listings lasted just 14 days before going under contract. Now it's averaging 75 to 100 days, with nearly 1 in 3 listings undergoing at least one six-figure price cut. Realtors whisper about ghost towers downtown, where half the units sit dark because investors can't unload them. Boston, long considered a safe bet, is now proof that even stable markets can't escape a luxury downturn. The collapse isn't as flashy as Miami or Austin, but for homeowners losing $200,000 to $800,000 in equity, it's just as devastating. Number 3. Denver, Colorado. Denver was once marketed as the new frontier for million-dollar buyers. Mountain views, booming tech jobs, and a lifestyle that mixed ski slopes with city living. But today, Denver's luxury market is in freefall. In 2020, fewer than 1,500 homes sold above $1 million. By 2022, that number exploded past 6,000 to pandemic demand. Now, nearly half of those homes are sitting unsold, dragging prices down. Million-dollar listings in Denver have seen average price declines of 12% to 20% since the peak, meaning a Cherry Creek mansion once listed at $1.8 million now struggles to sell at $1.4 million. That's a $400,000 haircut in less than 2 years. Redfin-style reports show 40% of high-end listings in Denver have undergone at least one six-figure cut, while luxury condos downtown are seeing slashes of $200,000 to $300,000 just to stay competitive. The math for buyers is brutal. With mortgage rates hovering at 7%, a $1.2 million home means nearly $8,000 a month once taxes and insurance are added. Colorado's rising insurance costs, driven by wildfire and hail damage, are only making matters worse. Some luxury owners report paying $10,000 to $15,000 annually in premiums. The overbuilding frenzy hasn't helped either. Developers flooded the Denver metro with luxury townhomes and glass condos during the pandemic boom. Now, with demand collapsing, entire projects sit half-sold, their glossy marketing banners mocking a city where luxury buyers are evaporating. Even neighborhoods like Washington Park and Lehigh, once red-hot with bidding wars, are slowing. Homes that used to spark 12 offers in one weekend now can't get one serious showing in a month. For sellers, it's a nightmare. For buyers, it's a sign Denver's luxury dream was overpriced hype. Number 2. San Francisco, California. San Francisco was the gold standard of million-dollar real estate. By 2018, even modest fixer-uppers routinely sold for $1.5 million, and luxury homes soared past $5 million with ease. But the collapse since 2022 has been brutal. The city has seen luxury home values fall 15% to 25%, with some areas like Soma and Pacific Heights losing even more. A mansion listed for $6 million in 2021 is now begging for offers at $4.5 million, A $1.5 million wipeout. The culprit? Affordability and demand implosion. Mortgage rates near 7% mean a $2 million loan costs nearly $13,000 a month, excluding taxes and insurance. Even San Francisco's wealthy tech professionals are balking. The average household income in the Bay Area, around $130,000, simply can't keep pace with million-dollar-plus ownership costs. Inventory is piling up fast. In 2021, luxury listings in San Francisco lasted just 17 days on the market. Today, the average is 120-plus days, with 50% of million-dollar listings showing at least one six-figure price cut. Sellers are slashing $200,000 to $500,000 per property, while desperate developers offer perks like free HOA fees for a year, $100,000 buyer credits, or even luxury car giveaways. Even worse, the exodus continues. Thousands of wealthy residents fled during the pandemic, and many never returned. San Francisco's population shrank by nearly 6% since 2020, draining the luxury buyer pool. Add in rising crime headlines, declining downtown appeal, and one of the highest property tax burdens in California, over $20,000 annually on a $2 million home. And the appeal has faded. San Francisco's million-dollar homes aren't just losing value, they're hemorrhaging wealth. What was once the nation's strongest luxury market is now its cautionary tale. Number 1. New Orleans, Louisiana. New Orleans isn't the first city people imagine when they think of million-dollar real estate, but the collapse here is the most brutal of all. Why? Because the luxury market in New Orleans was tiny to begin with, and now it's evaporating altogether. In 2019, only a few hundred homes in the city sold for over $1 million. By 2022, fueled by out-of-state buyers and a short-lived boom, that number doubled. But in 2025, demand has cratered. Million-dollar listings are sitting unsold for 150-plus days, and price cuts are savage, often 20% to 30% off initial asking. A French Quarter mansion that once listed at $1.8 million is now begging for buyers at $1.2 million, a staggering $600,000 loss. The biggest killer? Insurance. New Orleans luxury owners are facing astronomical premiums, with some policies topping $30,000 annually to hurricane and flood risk. Add property taxes of $12,000 to $15,000 and repair costs in a city notorious for humidity damage, and owning a million-dollar home here feels like setting money on fire. The local income base can't support luxury either. Median household income in New Orleans sits under $55,000, meaning nearly all million-dollar buyers were out-of-state investors, many of whom are now fleeing as climate risk becomes too real. With each hurricane season, buyers become more reluctant and lenders more cautious. Luxury neighborhoods like the Garden District and Uptown, once prized, are filled with stale listings. Even renovated historic homes, dripping in character, can't find takers unless sellers chop off hundreds of thousands in equity. New Orleans represents the sharpest collapse because its luxury market had no deep roots. It was speculative, fragile, and easily broken. Now, million-dollar homes here aren't just crashing, they're practically unsellable, turning symbols of wealth into millstones of debt.